Wait a second. Are we crashing right now? I appreciate you clicking on my video, and I don't want to waste any of your time. Today, we are going to get into 10-year yield, TLT. We're going to move into Apple and Tesla, and then we're going to touch on those indices, the SPY and the Qs, okay? Let's get to it. Zooming into the daily on the 10-year yield, which correlates with the TLT, we are seeing an indecision bar yesterday, and today we have this topping tail, and we are moving downward all the way into, well, it's almost 5 o'clock, so an hour after trading. And I believe that this still has potential to move all the way down into these lows, possibly even the channel, by that CPI day on September 13th, which I believe is going to be the catalyst that causes the market to crash. As we switch over to TLT, you'll notice something on the MACD that you can also notice on the 10-year yield. We are rejecting the confirmation right now of more downside. And this just confirms, if you're subscribed to what I said yesterday, which is these are eventually going to come up into our trend line that we drew here, and then we'll have to discuss it from there. But for the most part, if we do extend up into these levels here by the CPI, the 10-year yield will have backed off, and then that CPI reading can come in hot, which will then cause TLT traders to actually sell this thing off to the downside and produce some kind of divergence down here on a daily chart in the future. Quickly on the 2-hour, we've been talking about this for a week now. We do have some sort of head and shoulders forming, and this easily could extend and pass it up into the upside. I don't necessarily see that playing out, but we have to be open to all scenarios. Down into a smaller time frame, the 30-minute on the TLT, we do notice this weird MACD behavior, which whenever I see that, normally it means that it wants to go find buyer somewhere. And the good part is we have a low here and we have this gap resistance. So if this thing does want to pull back and yields do want to pop a little bit higher in the short term, possibly we open up at these levels and then extend to the upside. But as you see, if you can see this little post-market bar here across the screen in blue, we are already extending up across this previous high here. So we could just see this thing start to rip higher as those yields start to back off. Even though this could pull back, which I kind of wish it would, because that would make for a good divergence trade, this would roll over, give us a higher low while the TLT gives us a lower low. If that doesn't happen, because the post market is already going up, I would see this ripping into here by the CPI, and then we will have to discuss it from there. Before we get into stocks, I want to discuss the VIX, and the VIX is giving us these big wicks on the upside on the daily chart. And this just tells me that even though we broke out of it, which is a good sign that something bad is around the corner, we do probably need to come down and cut this low, give us some kind of divergence on a shorter time frame to tell us that something horrible is around the corner. Convincing me that this thing wants to go lower for a double dip and give us a 2-hour divergence is this right here. The MACD is rolling over pretty aggressively, and we're breaking out of some structure that I'm going to go through on the 30-minute chart. But overall, I believe this move is going to come down into this area, possibly here, possibly somewhere near closer to the CPI release, and then we will see that big explosion to the upside where we will see the stock market crash of 2023. But if you were paying attention to VIX, you could have seen this big downward move coming. Why? Because if you just looked at the MACD, you might not have seen anything very relevant. But if you looked at the RSI, we see this downward divergence here, this negative divergence that was playing out right here at this high. And it's pretty cool because if we just draw a little bit of structure here, okay, let's draw just a little bit. We see almost a perfect channel that it was going in, and it went down here, popped up to the upper side, giving us that point of reference, came down, and I did not necessarily see this pop happening. I did see another test of this trend line happening, but I overall see this as good news, as in this actually proves that there is some volatility that could come back into the market, and it just needs to go down for a double dip in order to fully come back into the market by the CPI. I want to do this on every chart for the rest of the video because I feel it's important. Look at Apple and notice what is going on if we remove all the mess. We have given up the 50, we have given up the 9, and we've given up the 20, which means that we have now opened the door to this 200-day moving average, and it is a great possibility that we simply just come down into that. I overall think that that is going to happen in the future, but I think that there will be some kind of small bounce into the CPI on September 13th. On Apple, as I go into a 2-hour, I drew this new resistance zone below us because I felt it was important. We actually gapped into this zone. We saw it as resistance. We gapped into it. We stayed in for it for quite some time. We touched the bottom of it. We touched the top of it. We touched the bottom of it again, and then we extend into our channel to the upside. Now, we even have some wicks in here that used it as support to launch us into the top of that channel. And as we zoom into the near term, we see that we start to coil up around this area. We break it, we come into it, and we use that area as support to launch us into the upside. And it's funny because we actually gapped out of it and we had some wicks with to get some support from it. But when you gap out of something, that means that they find that level important. So I was thinking today was, if we actually close on a daily in that zone, I'm going to be pretty fearful. Overall, we gapped out of that zone. We came up into some sort of resistance here, and then we pulled back into the top of that zone, using it as support again to launch us into the upward resistance. Right here is where I made a video saying this needs to find some buyers in order to go higher. It looked extremely unhealthy. If we pull up the MACD, we can see that it gave on the RSI and MACD some very overbought readings for quite some time. And I said, this is not healthy. People, even bulls, wanted this thing to pull back. If you're subscribed, you caught this because I told you that it needed to pull back and find buyers possibly at the bottom of the resistance zone. But what I was suggesting would happen is it's going to go to this medium-term trend line, and then we will have to see what happens from there. We got a reaction to the upside from it on this bar, and I said this could be it. We actually could bounce higher from these areas. I happen to be wrong, but thankfully in my video, I did tell you that the possibility of a bounce and then a big downward move was still open. And I do feel bad about that part because at that point, right here, I told you that in order for us to see more downside, we need to be paying attention if the 4-hour or the daily had crossed over. And the 4-hour actually did cross over, but the bar, let me blow it up for you. The bar actually was so small that I didn't see it right away. And I looked at it this morning and I said, oh, this thing could go lower. Okay, so this bar right here told me that that's the reason the stock had so much downside. The 4-hour crossed, meaning the momentum had shifted to the downside, and now we're seeing that downward pressure. As we go into shorter time frames on Apple, the 30-minute, we did notice we came into that support zone, and then we bounced up from there. But what I'm noticing on the MACD and the RSI, we haven't crossed 50 yet, and the MACD is kind of fizzling out. It's not seeing a big V shape, and that's what I like to see before I take any kind of position in a trade. We are getting a slight bounce in the post market, but what I would like this to see is it dip back into this resistance zone, possibly giving us another point of reference, rolling this slightly over, giving us a nice little divergence that then we can hopefully confirm, and then we would know, hey, there is a chance that this thing goes right back up into this resistance zone. Last thing I wanted to point out is you'll notice my little white bar across here is not at the gap fill area here. It's actually starting right here. And that's because we had prior resistances here and we gapped below it. And what did I say about gaps when I just started talking about Apple? It is important to pay attention to those because they see that price is important. So that means that if we are able to extend even all the way up to here, there is potential for resistance in this price that could lead us to further downside. But I believe if we do go grab some extra buyers, maybe we extend up, bounce off that, extend up higher into that resistance zone before the CPI. Now, a stock that is in a little bit of a better spot is Tesla. I'm liking how this is kind of giving me a bunch of consolidation in here, and I'll zoom in to show you it. But overall, we have to pay attention to Tesla actually it looks like it kept its 9-day and it kept its 20-day, and it doesn't look like it wants to fully reach that 200, but the door is still open because we're seeing it on so many other charts for so many other stocks. The other good news for Tesla is you're seeing some sort of consolidation here, okay? We are getting a little triangle formation that could break to the upside or downside, but right now I'm assuming it'll break to the upside. It doesn't mean that tomorrow we can't see this dip in and find new buyers because our MACD and our RSI are pretty dang flat, okay? So we really want that extra point of reference before we take a trade, and it easily could fall off and then extend to the upside right into the CPI day, and possibly we go way up there and touch those white lines, which happen to be the gap resistance and gap fill area, but the measured move for this is only up to 270.28. Getting rid of all of our drawings once again on the SPY on the daily chart, we can notice that it as well has lost all of its moving averages and is pointing directly towards that 200 moving average. It makes sense. The door is open to that happening, but I believe that in the short term, there will be some kind of bounce into the CPI. I do believe the SPY might pop higher after it goes and grabs some buyers because we actually got some sort of divergence here between this low here and this low. We actually saw a little bit of a divergence here that I wouldn't necessarily say is relevant, but the reason that I'm paying attention to it is because I'm going to blow up this RSI real quick for you. If you notice here on the RSI, we actually got a pretty significant divergence on a 30-minute chart. From this divergence, we can see a bounce, but we got a little bit of a bounce, but it kind of just looks like yesterday where we're kind of seeing people who are probably trying to catch the falling knife right now and not actually looking for any kind of structure. We're flattening out, which is kind of a good thing because we're holding above prior resistance that is now becoming support. And this thing could very well just start extending to the upside, but I do believe, and I would like to see as a trader, another point of reference coming down into those lows, giving me possibly a double bottom, curling this MACD over a little bit. And then once I see confirmation, I can say, hey, this structure looks decent enough for me to try to think of a trade to come up with. Lastly, on the SPY, I like to have multiple reasons to take a trade, and I just start drawing ideas. And one of these was my idea. I actually saw some sort of wedge forming, and this could play to the upside while I was seeing divergences pop up on the MACD, on the RSI, and this thing could pop higher. But the reaction out of this wedge wasn't very good. So I still see this coming down, possibly testing this trend here, or this wedge here, or just coming down into the low, giving me a double bottom, and then we extend into the upside. Even though I keep saying bounce, remember to keep looking at those daily charts because we are losing some moving averages even on the Qs. Now, the Qs are lucky because we actually kept a couple of those moving averages, and maybe that's enough to extend us higher and give us some sort of bounce. The shorter time frame on the Qs is what is also telling me that the SPY might need to go find some more buyers before it's able to bounce, and that's because we are seeing this kind of sluggish upward move after finding our low, and we do not see any divergence on the RSI or the MACD, and that's crazy because we actually see it on the SPY. So what I would like to see is for this to pull back, give me a divergence on the SPY and the Qs at the same time, and then we can extend to the upside. Which actually, if you just look at my support and resistance line here, this little white line, we're actually tagging that as of the end of the day, and there will be sellers in that area. So unless we gap above it, I do see us pulling back, and then we're going to go try to fill some of these gaps. What's the main takeaway from this video? The door is open to that 200-day moving average on the daily charts, but that doesn't mean that we can't get a small bounce until then. It just means that we have to be aware of what's going on, looking at our shorter time frames and looking for reasons that give us a higher probability that there could be a bounce. The other part is pay attention to where price is at that September 13th CPI date, because no matter where that price is at that time, we are going to see some major moves in the market. And I believe that that is the catalyst that will actually start the stock market crash of 2023. Thank you guys for making it to the end of the video. I really appreciate it. And if there's a stock you would like me to break down, please put it in the comments. Hopefully you found something in this video helpful that you can use, and I hope you have a great day. Peace.